Hi everyone, let's have a look at my bullish and bearish medium time frame and low time frame Elliott Wave scenarios on Bitcoin, starting with the scenario we've been looking at for a long time now, which is a 3-wave structure in an ABC zigzag structure 5-3-5 wave move. Inside this wave B, we then have this 3-wave structure where we identified this white zone as a support area, looking for potentially a move to the upside where the main target is going to be the triple top over here at about 30k. But in Elliott Wave terms, we also have the 1-to-1 over here taken from the low of this A to the high of this blue A to the low of the blue B that we have currently sitting at about 30.4k, which also has a nice confluence with the blue target box, which is sitting between 30.2k and 30.5k. Now currently price bounced on the 886 level, and in this support area we had a weekly, the 886, and we had potentially a triple bottom for a liquidity grab. But I also mentioned that once price is bouncing on the 886, I prefer price to continue to the upside and not return to the 886. Even though we have been ranging here for a while, price never returned to the 886 or grabbed the liquidity. It continued moving to the upside at the moment. Now we also have bullish CVD divergences between the low over here and the higher low that price has created, and the target for these bullish CVD divergences is the high at 30k. So this is a very interesting target and potential target for this scenario over here, potential trading setup to the long side, where entering in this target box was the goal, stop loss safely below, and the main target is going to be the triple top that we have, which has most likely a lot of liquidity from people that went short throughout this range. So actually taking that liquidity and then looking for a move to the downside is going to be very, very interesting, where then we have the potential short scenario over here. If we then go to the triangle, then the triangle over here was a scenario where many people online were looking at, and I mentioned, well, in my opinion, what makes most people lose? If this is a triangle which is pulled very easily with a couple of trend lines and it's a pattern that many people will see, what's the probability of a triangle playing out? What's the probability of a continuation to the downside? And I mentioned, I think yesterday or 2 days ago with this triangle, I explained it in more detail. What makes most people lose? Is that a continuation to the downside or a move to the upside? Well, if this is a triangle, you have the breakout traders that are going short over here, put their stop loss in the triangle and they expect downside, and you have the people shorting in this range that have their stop losses above the triple top and are also looking for downside. So in my opinion, what makes most people lose, as mentioned in previous videos, is a move to the upside where you are stopping out the breakout traders, as well as then eventually for more upside, the people that went short in this range because of the stop losses above. So we definitely have some liquidity resting above the 30k highs. So basically, in confluence with the scenario I've just shown, I'm looking for a move to the upside to stop everyone out that traded the triangle, as well as grabbing the liquidity at the highs for then a move to the downside. And that would then answer the question, what makes most people lose? Well, in my opinion, it wasn't downside, it was upside. And so far as it stands now, at least, price is moving to the upside. Where I think something that is interesting and I do like to show is this volume profile range pulled from the 17th of March all the way to where we are right now. And if I then go to the 1 hour time frame and get the volume profile on the chart over here, then what you can see is the point of control has at the moment been passed and back tested. So potentially that could signal a continuation to the upside where the value area high sitting at 29.1k is next. However, we are still ranging over here. We could of course dip below the point of control once again and then move up, or if candles are gonna close below the point of control, there's of course a higher likelihood we continue to the downside. But as it stands now, it fits the scenario where we are looking for a little bit more upside still to come. Of course, upside will go in waves. It's not like an arrow all the way straight to the upside, but as far as it stands now, we did cross this point of control, which is a very, very high time frame point of control, right? From the 17th of March to where we are now, it's a multi-day volume profile or multi-month volume profile range, where currently we are ranging above the point of control. Now, if we then go to the low time frame scenarios, we had this ABC going on where I mentioned, well, this has to be the low of wave C, and then an ABC in my previous video, also ending inside the common target area for a wave C, which is between the 1 and the 1.236. And then with this move to the upside, the bullish scenario is that this is an impulsive structure, in this being a wave 1. Then we have a complex structure on the wave 2. And then now we are looking for a wave 3 to the upside, where also, of course, also thanks to the news partly, we have this big volume candle to the upside, and we then expect eventually continuation to the upside. Now, currently, price hit the 1.618 trend-based fib extension, which is pulled from the low of C to the high of 1 to then the low of this wave 2. And this is a minimum target for a wave 3, and it is a rare target for a zigzag. So in case this is a 3-wave move in a zigzag, the 1.618 is a rare target, but it is a common target for a wave 3. So that is something to think about, where the impulse is potentially at the moment more likely than a zigzag, after which you then expect more downside. So the impulsive structure at the moment has a higher probability, I suppose, higher likelihood, higher probability. However, a wave 3 can be very extended. The 1.618 is a minimum target, after which you might expect a wave 4 before then a wave 5. But a wave 3 can also go to the higher targets, as you can see on the chart over here. It's also always quite difficult to know exactly how high a wave 3 might go if this is indeed an impulsive structure to the upside. Now, this might be the high of a wave 3, right? After which we are ranging, and then a wave 5. But then if this is going to be a 1, 2, 3, 4, 5 wave structure, it is never going to be high enough to take the 30K high in one impulsive move. Like over here, we had one impulsive move to the upside, reaching all the way up here. But then in this scenario, you would want to see something similar, right? You want to see an impulsive move to the upside, because if price is not going to make it in one impulse, you have to think of a 3-wave structure. And if this is going to be a 3-wave structure, it basically means on the medium time frame count that this has to be a 3-wave structure as well, and then a zigzag, A, B, C, for example, which is not the easiest to count, a zigzag in this impulsive structure. So I prefer to see a impulsive move to the upside, where we are not going to see a very clear 3-wave structure personally. But of course, we have to wait and see how price is going to develop. The more bearish scenario is that this is a 1, 2, 3, then a wave 4, and then a wave 5 to the downside. So basically, this is then the high of a potential wave 4 for then downside in a wave 5. As long as this 0.5 Fibonacci taken from the high of 2 to the low of this wave 3 is not invalidated, meaning you close higher time frame candles above the 0.5, we still have the potential for a movement to the downside. It is not preferred with the bullish divergences that we have as well on the medium time frame, but it is the bearish scenario. In case price is going to move to the downside, we have to think about this potentially being a 1, 2, 3, 4, 5. Another reason I don't necessarily like this to be a 1, 2, and this already over here being the end of a wave 3 is because of the wave 3 length. So if we take the trend-based fib extension tool from the high of 1 to the low of 1 to then the high of wave 2, you can see that the most common target for wave 3, or usually the minimum target, is the 1.618, which has not yet been reached. So even though wave 3, yes, it is longer than this wave 1, the main target for wave 3 has not been reached. So that is also another reason why this at the moment is an alternative scenario, and a preferred scenario is actually finding a little bit more upside to possibly go all the way to the 30K highs and take these highs for some extra liquidity before then a move to the downside. If you then look at the news, it's not just finished, or it's not finished just yet. So today we had some high impact news at 2:30, which caused that big candle to the upside as well. Always keep in mind that the red flags over here can cause volatility, but also tomorrow again at 2:30 p.m. Central East European time, so you have to check your own time zone, we have news again. So that might be another very volatile time tomorrow at 2:30 p.m. Central East European time. So make sure that whatever you do, you trade safe, right? Have your risk management in place. Make sure you trade your strategy, your plan, whatever it is, so that you are prepared for whatever is going to come your way. So I hope this video was helpful or valuable to you. Please check out the macro and high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.